Toyota Motor was established in 1937 and it was successfully merged with Toyota Motor Sales that was established in 1950. In 1982, becoming Toyota Motor Corporation. The 7 guiding principles and the 5 main principles of Sakichi Toyoda was compiled into Toyota Corporate Social Responsibility Policy. And the Toyota Global Vision consists of the 3 phrases that was concluded. Toyota has business partnership with Hino Motors since 1966 and started business partnership with Daihatsu Motors since 1967. And the company competes with General Motors, Ford, Chrysler, Honda, Nissan, Volkswagen, Opel, Renault, and Peugeot. The core business of the company is motor vehicle production and sales, and the company operates through the 3 business segments, which are the automobile operations, financial services, and all other operations. These are the 3 analyses of Toyota's latest 3-year financial ratios. The first one is current ratio. From the table, we can see that Toyota has 1.096 times of current asset to meet its requirements of its liability in 2011. And for the year 2012, it is 1.046 times. And for the year 2013, it is 1.07 times. So the terms of current asset to meet its requirement of its current liability no change too much, almost remain the same level. And the second one is quick ratio. Toyota has 0.975 times of its most liquid assets to meet the requirements in year 2011. For year 2012, it's 0.91, and for year 2013 is 0.93. The terms of liquid asset to meet its requirements almost the same level in the 3 years. For the third one, inventory turnover, Toyota can sell off its inventory for 12.414 times in 2011, 10.85 times in 2012, and 10.08 times in 2013. It reduced in last 3 years. And for the fourth one, average age of inventory, Toyota can sell off inventory in 29.40 days in 2011, 33.64 days in 2012, and 36.20 days in 2013. And the fifth one is average collection period. For the 2011, it is 84.73 days. For 2012, it is 85.73 days, and for 2013 is 89.31 days.
The next one ratio is total asset turnover. For every $1 worth of asset utilized, the company Toyota can generate 0.60 times of sales in 2011 year, and it can generate 0.57 times of sales in 2012 year, and 0.59 times of sales in last year. It's almost the same in these 3 years, so which means the assets have been eventually used. Next one ratio is debit ratio. 63% of total assets of Toyota were being financed by debit in 2011 year, and 64% of total assets of Toyota were being financed by debit in 2012 year, and the same ratio, which is 64% of total assets of Toyota, were being financed by debit in 2013 year. It increases last 3 years. The value indicates that Toyota always has been financed high asset with debit, which means the potential risk and the return is very high. Next one ratio is times interest earned ratio. Toyota has 15.95 times of ability to pay off its interest in 2011 year, and it has 15.51 times of ability to pay off its interest in 2012 year, and for 2013 year, it has 57.56 times of ability to pay off its interest. It shows that the ability of pay off interest of Toyota increases in these 3 years, so it has a very high ability to pay off the interest. Next one ratio is for gross profit margin. For every $1 of sale, Toyota is able to generate $0.10 of gross profit in 2011 year. It is able to generate 0.098 of gross profit in 2011 year, and Toyota is able to generate 0.14 of gross profit in 2013 year. The gross profit margin ratio increased in 2013 year. It can generate more gross profit in last 2 years. It is positive. Next one ratio is operating profit margin. For every $1 of sale, Toyota can generate 0.026 of operating profit in 2011. And for every $1 of sales, Toyota can generate 0.020 of operating profit in 2012 year. It can generate 0.06 of operating profit in 2013 year. It means that operating profit has been increases in these 3 years. For net profit margin, for every $1 of sales, Toyota can generate 0.023 of net profit in 2011 year. It can generate 0.009 of net profit in 2012 years. And for 2013 year, it can generate 0.046 of net profit for every $1 of sales. It shows that the net profit margin has been continually increased. Next one is earning per share. For every $1 of common stock equity, Toyota can earn $14.24 for common stockholder in 2011 year. It can earn $10 for them in 2012 year, and it can earn $29.67 for the common stock holders in 2013 year. It continually increased in last 2 years, which means Toyota has made high profit to stockholders. Then it's for return on total asset. For every $1 of total asset invested, Toyota can earn $0.014 for common stockholder in 2011 year. It can earn $0.009 for common stockholder in 2012 year. It can earn $0.027 for common stockholder in 2013 year. It increases in last 2 years, so Toyota can earn some money for every $1 of total asset invested. For return on common equity, Toyota return earned on common stockholder investment is 1.028 times in 2011 year. Its return earned on common stockholders investment is 0.71 times in 2012 year, and it can earned on common stockholders investment is 2.42 times in 2013. It has been dropped in 2012 year, but in 2013 year, it has been bounced back, so which means it can be invested.
Okay, next one is price-earning ratio. Toyota investors paid 4.56 for each dollar of its earning in 2011. In 2012, Toyota investor paid 9.2 for each dollar of its earning. In 2011, Toyota investors paid 4.11 for each dollar of the earning. In 2012, it has been significantly increased, but in 2013, it dropped back to pay 4.11 for each dollar of firm's earning. In Toyota, book value per share of common stock is 13.85 in 2011. In 2012, book value per share of common stock is 14.01. in 2013, book value per share of common stock is 12.24. Book value per share of common stock of Toyota becomes less in last 2 years. It becomes cheaper, so it's good for investors. The last one is market ratio. In Toyota, market ratio is 4.69 in 2011, 6.57 in 2012, 9.97 in 2013. Book ratio increased much in these 3 years. It can let the common stockholders earn more money. Next one, identify any significant activities of the Toyota for the past years. Based on our above ratio analysis, it can show that 2011, 2012, between 2013, it has varied a lot. See from the diagram. In 2011, the earning before interest and tax was 5,632. In 2012, it's 4,327. But in 2013, it's up to 14,045. So which means the difference between 2012-2013 is a lot. The reason cause of this is because in 2012, the company was announced a large-scale recall due to a potential fire hazard with its driver's side power window assembly. Actually, that is not the first mass recall in that time. In 2009 to 2010, Toyota was forced to issue a pair following revelation that certain models were at risk of an unintended acceleration. Those two recalls affected nearly 6.7 million of Toyota cars. In the meantime, the political issue that also affected this company due to, in 2012, the Chinese Wars, which is about the island between China and Japan. Chinese refused to buy any Japan product in that period of time. In 2012, Toyota's China sales have dropped dramatically, 49% lower year-over-year for the month of September, and is not the only Japanese manufacturing suffer for its flag. Honda sales were off 41% as well. Hence, that's why caused a big difference between 2012 and 2013, which means 2013 the company was beginning to get well. So, in conclusion, according to our above ratio analysis, it shows that Toyota still be able to maintain a good business, especially the profit is kind of high. Toyota return earned on common stockholders' investment is 0.71 times in 2012, but is 2.42 times in 2013. It has increased, whereby it can be invested. In the meantime, for book value per share of common stock is 13.58 in 2011, 14.01 in 2012, and 12.24 in 2013. Book value per share of common stock is became cheaper, so it is the time to invest. In addition, even in year 2012, Toyota faced major problems, but it still can remain favorable business. Obviously, Toyota is a reliable company, so we suggest that investor can invest the money to Toyota. Thanks for your watching.